and welcome back. You're watching KTN Business Today. We now enter into a second part of our show where we want to talk matters technology as well as what's happening in the construction industry, and we want to begin with Kenya fast rushing to bridge the huge housing deficit standing at about 150,000 units per annum. A number of industries have aligned themselves to tap into this growth area. One of the companies that has managed to cut out a niche for itself is Mabati Rolling Mills, a local firm that has defied odds to rise to become a market leader with a presence in more than 12 African countries and an asset size worth billions of shillings. On the first episode of our weekly feature Transformers, I profile the role of steel and iron sheet dealers in the journey towards transforming Kenya's built environment. The construction industry in Kenya is growing at a rapid pace thanks to a thriving real estate sector. This has presented unending opportunities for entrepreneurs to grow. One of such is the Safal group of companies, its flagship subsidiary being Mabati Rolling Mills. What should you expect in the factory tour?
Well, what you expect to see, number one is the coating process, which we are very proud of because we have invested in very good technology, and you will see for yourself. The process, that's one. Then the most other amazing thing you'll see is how flat sheets magically transform into roofing sheets.
Interesting.
Yeah, I think that's the most magical thing. So this is where the magic really happens. Yeah, the profile.
I can't wait to see that.
Yeah. So what you're seeing now is a bare coated coil, which is basically about 6 tons.
6 tons?
6 tons of steel, all rolled up in about maybe 30 gauge or 32 gauge. It's just landed now from a facility or from a factory in Mariakani, Mombasa, where we do the metal coating. So when it comes here, now it will be stored, and from here, then we take it to the next step. So this is all this you see here is material that is waiting to be color coated. The production system is just in time. So when demand comes, then we bring from a factory in Mariakani. So we don't prepare them until there's demand. So it will vary from month to month.
So basically what's happening here, this is what they call the coiler. From this particular stage, this will now be converted into iron sheets. This is where all the magic happens. The end product is churned out. The process can go on for as long as the orders are coming in. Well, this is known as the Royal Range, one of the premium products that is produced here by Mabati Rolling Mills, and they say they are continuing to position themselves when it comes to tapping into the regional markets. For MRM, growth has been inevitable. By how much do you expect to grow the company, really? Percentage-wise, sales-wise?
We're growing at a rate that I don't even know how to quantify. I think the more that the Republic of Kenya starts investing in homes, that will determine the rate of our growth. The more we do partnerships with the associations and the government will determine also how much we're able to support the consumer to develop their home. So we grow at the rate that Kenyans decide to build and become proud homeowners.
A lot of buzz happening when it comes to the property market. We've seen county governments, we've seen a lot of Kenyans going into real estate. What's really driving the growth of your business?
The growth of our business is being driven by the fact that Kenyans want more. They want a better life, they want better quality. We're a very proud country. We believe in presenting ourselves the best way. We take care on how we look, what we drive, and our homes. We've been working very closely with the NCA, with the Kenya Property Developers Association, the Architects, AAK, the Architects Association of Kenya, with all these different players, the big boys in industry, and we're one of them. And we're working towards sharing best practice, ensuring that there's training So when you're building your home, no matter who you hire, you know, he's been qualified and trained by the government, not only of Kenya, but with partners in the private sector. So we're hopeful. We know that there's a housing deficit. There's more people who want homes than we can build.
Yeah. If there was, let's say, one thing you'd want the government to address so as to make the business environment much friendlier for big players like you in the industry, what would it really be?
Well, there's a bunch of little niggly things, but at the end of the day, one of my key concerns is the fact that we're a local manufacturer. We employ Kenyans to provide products for Kenyans, and as a Kenyan company, we want to ensure that there's a minimum standard of quality in the market.
Correct.
So that we're not competing with people who are giving substandard quality material in the market. So we would work and look to the government to support us in ensuring that the products that are in market, that are accessible to our consumers, are of the minimum standard. So working with KEDS and the various partners in the industry and stakeholders to ensure that we don't have cheap material competing with good quality, local produced material. Because it'll undercut us, it'll offer substandard homes for our consumers. So when they invest all this money in a home only for the roof to come in, that we don't want. We want to work with our government to ensure that when a person saves that money, buys their home, builds their beautiful dream house, that they have the quality to last into the next generation.
What's in the future for MRM?
We are going to be launching our new lifestyle, our stone-coated products, so look out for that. And we have a variety of products coming into the market, from prefabricated housing to affordable housing to solution and partnerships where there's training, consumer. We're going to work through our service centers, which are all across the country.
Thank you for your candidness.
It was a pleasure hosting you today.
A pleasure as well.
Thank you.
Thank you very much. Salama ndio
Well, of course, Transformers will be airing every Friday here on KTN. Well, let's now shift gears a bit and still keeping it with Matters property. We now are joined by Sakina Hassan Ali, who works with House Consult. And Sakina, we've seen some recent developments in the property market. Of course, you recently released the House Q3 report, and in this report some of the key highlights were that land prices have continued to appreciate. Perhaps tell us what was the striking aspects around this?
Well, what we found is that despite the current uncertain economic climate, with the interest rate environment, with the financial sector confidence, with the stock market falling in the last year, what we found is that land and property have continued to appreciate in a stable manner, as it has been over the last 7 years. The economic situation right now hasn't affected land prices. There's been no down cycle, which is encouraging for investors who are looking for safe asset vehicles and guaranteed returns in this country.
Guaranteed returns. We've seen land delivering some of the highest returns in the recent years, really. In the last 7 years, for example, from the House Index, we are seeing Nairobi land appreciated about 8 times, if I'm not wrong. Perhaps what's the reason behind this?
Well, I think one of the biggest things was it was demand driven. So the number of units that were being supplied were not enough. There is a current housing deficit of 200,000 units a year. And what happens is a lot of people like to be around the places that are that have infrastructure, and that's mainly, central Nairobi. So what's happening is people were going with higher density housing projects on land in Nairobi, and what happens is then that drives the house prices up, the land prices up, and we've seen that escalate over the last 7 years. Actually about 5.5-fold in Nairobi, 6.2-fold in the satellite towns. But we have seen some suburbs escalate beyond that. Upper Hill, for example, has escalated 8-fold, as you said.
Oh yes.
So there has been a much...
Maker going for, I think, 500 million or something?
Now, yes.
Wow.
So, yeah, so Upper Hill, I mean, Upper Hill is one of
and
the...
are people buying these parcels of land?
Yes, they are, at a decreasing rate. I think in 5 years ago, it was probably... the buying activity was probably a lot higher, and we've seen a lot of supply in the high-end market, which has led to a stabilization of the land price increases. So the escalation we saw 5 years ago is probably not what you're going to see in the last year. But we've seen that escalation move to the satellite towns. So places such as Kiambu and Athi River have really seen those escalations. Interestingly enough, the returns that somebody would have got buying land in Athi River and in Upper Hill were not very different, yet Athi River takes a smaller portion of investment than something like Upper Hill.
Correct. Speaking about taking a smaller portion, we've also seen around the 14 satellite towns, the likes of Athi River, Mlolongo, Thika, Juja, land has been really going up. Why are people moving out to the satellite towns really?
I think the biggest thing would probably be affordability. Nairobi has, if you look at the land price escalations and the house price escalations over the last 7 years, it is getting unaffordable for people to own homes in. They may possibly be okay renting, but if you want to own a home, you're probably better. It's probably more affordable outside of the city. If you look at the infrastructure development, in the last couple of years, it's been intense, and it's really aided the accessibility of these satellite towns to Nairobi. So that's why you see this outward movement.
So this outward movement is sort of giving a new lease of life to these far-flung areas, like we've just said, the likes of Thika, the likes of Juja, and which other satellite towns are likely to come up really?
So there's a couple of them that are just sort of starting to pop up now. The front runners before were Thika, probably Mlolongo, Athi River, Kiambu, Limuru, but now some
Rongai?
Rongai, yeah. So now some of the underdogs are coming up. So we're seeing Kiserian being one of them. It's been one with the highest growth in the last year. We've seen Juja coming up. So it's all the ones where the price hasn't really been maximized that are now coming up in terms of capital appreciation.
And looking at the future when it comes to land, we're also seeing a lot of activity happening in the likes of Naivasha, Nakuru, these other counties really. And who are the key targets, especially when we talk about Nairobi, because as you've rightly said, Nairobi is sort of too priced out. The prices have literally hit the roof. And who are the target now for Nairobi land areas?
Right, so when you look at the areas, some of the towns outside of Nairobi, so we're looking at Naivasha, Nakuru, Kisumu, Mombasa, Eldoret, Nanyuki even. When you look at those, interestingly enough, if you look into the data, majority of buyers in those areas are actually from Nairobi. So a large percentage of them are from Nairobi. And what you're seeing is people moving the investment funds from the city where it's stabilizing, the last couple of years, and moving to areas where there's now more rampant price escalation so they can get better returns. In terms of Nairobi, who's buying, we still find that in terms of house purchases, about 50% of them are investors. So what's happening is a lot of people are buying housing and producing those housings for rental returns. So the housing that's actually being built is actually not going to homeowners. What's being built is the rental pipeline for the people who can't afford to buy homes. Will end up renting those.
And speaking about rental returns, we've also seen in the House Property Index some interesting statistics coming in about rents. Perhaps just walk us through that.
So what happens is normally sales and rentals have an inverse relationship. When sales prices are being driven up by demand, you'll see, and people are moving towards home ownership, you'll see rents stabilize. So what's happened is, in the last quarter, we've seen rents slow down to 1.6% over the quarter, and that's mainly driven by the apartment segment, which actually had a fall in asking rental prices at 0.5%. And that's what we're seeing in the rental market this quarter.
So moving forward, what should we expect really? I know quite a number of Kenyans on the rental bracket perhaps, and there's been that fear and the speculation that with the increase in the interest rates, there's a probability really where we could also see the rents also going up.
Right, so what happens is the hike in interest rates moves home ownership as a dream further and further away. So what happens is people opt out of home ownership because they cannot afford the mortgage repayments, and they're moving towards the rental market. So what you then see is, while there's some demand coming out of the sale market, it then gets redirected to the rental market for people who can't afford to buy houses. They now move towards rent. So you'll see upward pressures on the rental market as people's dreams of owning a home, wither away with the increasing interest rates.
Finally, Sakina, I can't let you go without asking you about the recent news we saw that a real estate investment trust has been launched at the NSE. What does this really mean for the property market?
I mean, it's fantastic. One of the best, safest, highest yielding asset classes in Kenya and probably worldwide is property. But one of the disadvantages of it is it's inaccessible unless you have a lot of funds, a lot of experience,
deep pockets,
a lot of experience, knowing how to play the game. In this way, people can buy into get the returns of real estate without actually knowing much about it and without having deep pockets. So it's fantastic on the side of investors in the market that they get to play in the real estate market without much risk. On the side of the REIT managers, or in this case Stanlib, they get to
tap into this market as well.
Yes, they get to raise finance without having to pay the high interest rates that we're seeing right now. So it really is a fantastic bridge in the market, especially in the current environment. It's really very welcome. It's a very welcome move.
Many thanks there, Sakina Hassan Ali, the research director with the Haas Consult, giving us interesting perspectives around the trends we are seeing in the property industry, saying that land will continue to appreciate in the coming years, as well as they'll also be keeping a close eye on how the uptake of the housing sector continues to pick up. Well, this is the end of KTN Business Today for this week. My name is Abi Agina. Coming up next is News Hour with Joy Doreen Bira, and we'll catch up next week, same place, same time. Do enjoy the rest of your viewing and have a lovely weekend ahead.